Hey everyone, it's Monday morning, January 6th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. First off, let's talk about Friday's U.S. jobs report. It's expected to show that the economy added 154,000 jobs in December, with the unemployment rate holding steady at 4.2%. The labor market's been a bit of a roller coaster recently, with strikes and hurricanes causing some volatility. November saw a strong rebound with 227,000 new jobs after a weaker October, so all eyes are on whether that momentum carries through to December. Now, while this jobs data is important, it's part of a bigger picture. Investors aren't fully convinced we'll see more than 2 Fed rate cuts this year, so any signs of continued strength in the labor market could influence those expectations. Plus, before we even get to Friday, there's a lot of labor market data to chew on. On Tuesday, we'll get the JOLTS job openings report, and on Wednesday, we'll see private sector hiring data and the weekly jobless claims, released a day early because U.S. markets will be closed Thursday to honor former President Jimmy Carter. Speaking of the Fed, their December meeting minutes drop on Wednesday. Remember, this was the meeting where they delivered their third consecutive 25 basis point rate cut. Chair Jerome Powell called it a closer call. And there's been plenty of speculation about diverging opinions among policymakers. The minutes should give us a clearer idea of the internal debate and how they're factoring in changes to fiscal, trade, and immigration policies under the incoming Trump administration. Oh, and don't forget, we've got Fed speeches to watch too. Governors Cook and Waller are speaking on Monday and Wednesday, while Richmond's Thomas Barkin and Philly's Patrick Harker will also weigh in. Lots to digest. Let's shift gears to stocks. After a stellar 2024, where the Standard & Poor's 500 surged 23%, things have cooled off a bit as we've entered January. This week's jobs report could help determine whether we're in for a third straight strong year, or if inflation and a cautious Fed will keep a lid on things. Investors are especially wary about an overheated economy reigniting inflation, something that's been a major concern with Trump's plans to ramp up tariffs. Now, let's talk inflation. We're getting flash Eurozone inflation data on Tuesday, right after German and French numbers come out today. If inflation continues to ease, it could give the European Central Bank more room to cut rates and support their struggling economy. Meanwhile, over in China, consumer and producer price inflation numbers are due Thursday. Inflation there has been flat, and producer prices are still in contraction territory, which is a sign that government stimulus efforts haven't quite done the trick yet. Lastly, let's check in on oil. Prices ended last week higher, with Brent up 3.3% and WTI climbing 5%. Cold weather in Europe and the U.S., combined with China signaling more economic stimulus, has boosted demand expectations for heating oil. A drop in U.S. crude inventories last week also helped. That said, the stronger dollar is keeping a cap on further gains. The dollar's strength reflects expectations that the U.S. economy will continue to outperform globally and that interest rates will stay relatively higher. And that's your week ahead in markets. From jobs and inflation data to Fed insights and oil price moves, there's a lot to keep an eye on. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Cela, and I'll catch you tomorrow with a brand new episode. Have a great day, everyone.